Hello again. Our finances are driving most South Africans into depression. According to Debtbusters Money Stress Tracker, 78% of respondents in their recent survey said they were experiencing financial stress. This impacts their home and work life and even their health. Financial journalist Maya Fisher-French joins me now to discuss the reality that we are faced with. Good afternoon, Maya. Welcome to today, and thank you very much for joining us this afternoon. I read your article in the City Press on Sunday where you talk about these two surveys, the other one being the Old Mutual Savings and Investment Monitor, which is OMSIM for short, together with the Debtbusters Money Stress Tracker, both showing similar findings. What are the key ones that have come out in your view?
I think what really struck me was this idea of financial stress. And we've always speak about financial stress, right? We all feel stressed about money, but the numbers were quite shocking. For example, I think that the Money Stress Tracker found that 78% of respondents were experiencing financial stress. And this, they said, was impacting their home life, work life, and even their health. And what was also very interesting for me was to see that women in particular were the most stressed. And I think a lot of that comes from the fact that many women are single mothers or are heading up the households in terms of income. And it's creating obviously a huge amount of pressure. And I think that just that word stress came out very, very strongly across both surveys.
Yeah, and I mean, the other point that I saw in your article is around the fact that according to the All Mutual survey, the OMSIM, 70% of South Africans had not seen any improvement in their income since 2020. Now, that was in the middle of the COVID-19 pandemic, and in this high inflationary environment and accompanied by high interest rates, if you have not seen an improvement in your income, you are basically earning less than you did 3 years ago.
This was actually quite a shocking number as well. And, you know, we're hearing this from people. When I speak to people, they're saying, well, our companies can't afford to pay. So many companies are just, you know, trying to make ends meet themselves in terms of keeping the doors open. Things with load shedding, for example, those are having huge impacts on businesses. And a lot of them are not able to give really inflation-related increases to their staff. And it was quite interesting because they had a researcher, well, actually a professor from Northwest University, who looked at some of these numbers, and he looked at the aggregate numbers in South Africa of what salary increases have people had on average, and what have the prices been for things like groceries and fuel and transport and that. And he said that somebody who in 2020, for example, was earning 25,400 Rand a month, they would only have experienced a 3% increase by now, by 2023. So they may be earning about 26,000 Rand now. But the costs of food and groceries had gone up so much that even if they were buying exactly the same goods as they were in 2020, they would now have a shortfall of about 650 Rand a month. So that means that people have literally got poorer. And then you add onto that exactly the point that so whilst people are getting poorer from simply inflation, at the same time, if you've got a mortgage, for example, a R1 million mortgage, that's gone up by about 3,000 Rand a month. To add that onto the shortfall just on your groceries and fuel and life, you know, just living expenses. And you can see that people are really, really feeling, well, I think stretched as we're past that. I think we're quite close to actually breaking that band now.
Yeah, times are really hard. I mean, the Money Stress Tracker, as you wrote, also finding that 62% of those earning more than 35,000 Rand a month, they had exposure in terms on debt repayments, paying more than 50% of their net income to service that debt, and this is unsustainable.
Absolutely. And what was interesting for me in that tracker as well was that it seemed to be very much people who were homeowners. And I sort of extrapolated that a little bit because I looked at sort of the income levels. If you're looking at most of the people who are affected are earning sort of more than 20,000 Rand a month or 35,000 Rand a month, they're most likely to have mortgages. There were also people who were older, sort of over the age of 40, were the ones that were really being squeezed and had debt repayments sort of exceeding 50% of their income. And what was quite interesting is that last last week, Standard Bank came out and they said that they have given some relief to some of their home loan clients, and because they identified that many of them were sitting with at least 40% of their salary just going to pay their mortgage. So these numbers are really being confirmed across the board, whether you're speaking to the banks or to these surveys. They're really showing that people are taking strain. And I think the OMSIM report also found that a third of people who are mortgage or homeowners have started to fall behind, or possibly will start falling behind on their repayments. So really, I think all of this confirming, I think what all of us are feeling in our homes, that the times have become very tough, and these interest rates are really, really hurting.
Yeah, I see there's this new concept that you write about that's been mentioned by the All Mutual Survey, the OMSIM, polyjobbers. Tell us about polyjobbers.
So polyjobbers, I think, is something we're seeing more and more, and that really is around the fact that most people cannot come out with the salary that they paid by their employer, and most people are making more, actually have other jobs on the side. So this is polyjobbers. So I think what's quite interesting with OMSIM's survey was they found out that about 50% of people have basically some kind of side income, and about a third of those are doing freelance work. For example, they may just have a little bit of contract on the side, but about 20% of them actually have a side business. And I think that's very interesting. I think that's a trend where, I always think of the Americans. Whenever you watch a movie about America, everyone seems to have 2 or 3 jobs at once. And I think the reality is, where are you supposed to find this extra money? Your salary hasn't gone up. Interest rates have gone up so much. Your home loan has gone up. How are you going to find the money? And I think for a lot of people, it is that side hustle.
Yeah, and it looks like we are turning more and more to reward and loyalty programs in order to fund some of our basic needs, Maya.
Yes, loyalty programs, these are coming through so strongly. We saw these stats actually come out from FNB as well, who, they've got the big eBucks reward program. And they said the majority of people are using them for fuel and groceries. So it's not luxuries. It's not to buy the nice to haves. It's literally reward programs. And we have seen a lot of the retailers, the banks coming to market with reward programs that really target and provide relief at that level. And as we saw, I think 70% of people say that they use their reward programs to actually help make ends meet. I mean, certainly I know it makes a big difference for me every month.
Yeah. No, that's definite. And it's good to see from what you wrote that many people who are under financial stress are cutting back on streaming services that we've got used to nowadays, and switching as well to less expensive supermarket brands. So the shopping for bargain buy, so to speak, in order to manage. But finally, Maya, is there a light at the end of this dark, tough financial tunnel for us?
Sure. I think for all of us, the light at the end of the tunnel, which perhaps is a slightly brighter light than it was last week, are the interest rate cuts. Obviously, when we saw the Reserve Bank did not hike interest rates last week, and I think we're all hoping that this is the end. There seems to be a bit of a debate among economists whether or not this will be the end of the interest rate hikes. But I think we've seen the South African, the rand being a little bit stronger. Inflation came down again. We got those numbers in. Those are all good indicators that we could possibly be at the end of the interest rate cycle. The bad news is that we're probably going to sit at these interest rates for at least another year, but hopefully they won't go up further. So I think right now, my advice to people is just to try and just not start taking on debt to try and make ends meet, because that has been one of the big trends we've seen, people borrowing more to make ends meet. But of course, that doesn't really solve anything. I think we just got to know that if we can, try as much as we can to hold where we are now, with the hope that interest rates don't go up further. And remember, when interest rates do come down, and they will come down, to use that opportunity to try and repay debt that may have been accumulated now. So I think it is just about, kind of hanging in there now at the moment, and trying not to take on any more debt.
Maya, thank you very much for your time and insights this afternoon here on Today. Of course, unpacking 2 recent surveys that showing how much we are under financial stress in the country currently. In other news,